There are times in the markets when buying the dip will actually get you killed. Literally not getting you killed, but getting your trading account killed. And in this video, I'm going to show you a ton of charts, guys, that point to a substantial move lower in the markets. I'm going to give you multiple illustrations from the most recent market downturns that point to a very, very simple but a very specific pattern. So despite of whether you are a brand new trader, an advanced trader, you'll definitely learn a very simple strategy in this video, a very simple pattern that's going to allow you to trade substantially better over the course of the next 14 to 20 days. Now, the reason I'm saying 14 to 20 days because there is a big move in the making here in the markets. Things are looking complacent, and I know what you're thinking, but Leonardo, it's the Memorial Day weekend, and Monday the markets are going to be closed. Who's going to be selling in the next couple of days? Shouldn't the market be hitting all-time highs? We're going to address that myth in just a moment. But right now, I'm going to keep showing you this chart, guys, because it's highly meaningful. The chart of Bitcoin, December 2017, February, and January 2018. And the pattern that we're looking at here is the bounce all the way to the top. We predicted the Bitcoin crash from here. We drop, we bounce, we drop, we bounce. We drop, and then we bounce. So this is exactly what Bitcoin is going to go through. This is exactly what the market is going to go through. And right now we're going to take a look at a bunch more examples so you can understand how to work the short, the bounce type situation. And clearly, it's really easy. I mean, if I was to hide this part of the chart right here from you, and I was just to show you this, right? Actually, let me scroll down just a little bit. So if I was to hide this part of the chart, all you're seeing right now in Bitcoin and all you're seeing right now in the market is this. What you're seeing is the market just recently dropped and it bounced. What you're seeing in Bitcoin is Bitcoin just dropped and it bounced. And so you're thinking, because most of the market participants have been so conditioned to buy the dip, oh, wow, we bought the dip and everything is fine. You know, clearly if you didn't buy the dip at the right time, because there were plenty of times to buy the dip, you could have bought the dip right here, and the next morning you woke up and you're like, oh, holy shit. And then you could have bought the dip right here, and the next morning you woke up and you're like, oh, damn. And then finally there's a little positive candle right here, like, damn right, hey, it's gonna be all right. And then, damn. And so basically, this is not the time to be shorting the dips, especially if you're not sure exactly how to time them. And trust me, 99.9% of the people are not going to be able to time the dips. So if you just use the strategy most of the people use, let's say you're going to average in and you're going to buy the dip, but the time you keep buying the damn dip, you're like, whew, it's over. So then, those of you that are not real traders, you're going to be like, yeah, but the market is up, but it's bouncing, but Bitcoin is bouncing, but everything is fine. Well, let's admit to two facts. Number one, when Bitcoin was dropping right here recently, and I'm using this chart from 2018 as an illustration, but the same concept. I hope you get an idea. I'm just trying to illustrate it from an old time frame chart because the history will repeat itself this time again. So if you're just an observer of the markets, if you're not an actual trader, you may say, well, buy the dip works. But again, when did you buy the dip? What was your actual entry? What was your actual exit is going to determine whether you really made money or not, or whether you got killed. And so it's easy to be a market observer and say, oh, but now it's, you know, we're moving higher. So, and a lot of people, especially new traders, they're like, yeah, but it's safe. I mean, we bought, we dropped. Now the market is moving higher, or Bitcoin is moving higher. And so this is the danger zone. I'll even switch the color for the danger zone right here. Damn it. This right here is your danger zone, because this is about the time. All the guys that sold right here at the bottom, by the time something moves here on the chart, they're like, well, clearly, okay, I wish I didn't sell right here. Damn it, why did I sell here? And so they're thinking, okay, well, now clearly the danger is out of the way. So this was not the danger zone. After something continuously drops and drops and drops for multiple days, this is not your danger zone. Your danger zone is right here when something is actually bouncing. So this right here is where the market is. This right here is where Bitcoin is right now. And we're going to glance at the current time frame charts in just a second. But I want you to understand that if I was to literally hide, let's say this area right here, let's put it in white. So I'm going to try to actually erase this part of the chart right here. So if you didn't know what was actually happening next to Bitcoin in this particular instance, right, you would think, well, wow, it's a V-shaped recovery, damn it. That's what I see, Leonardo. We're moving higher. Clearly we're moving higher. We're going to the moon. Fuck yeah. But this is, again, this is your danger zone. And the reason I call it the danger zone, because when you see stuff bouncing, it is easy to get in the mentality, well, it's automatically going to keep going higher. When you see stuff drop, it's easy to get in the mentality that stuff is just going to keep moving lower. But the reality of things, this is the danger zone. When you get to the level from where the actual drop has begun, okay, and when you see a substantial drop in volume, such as in this case, right, look at the positive volume, right, it's going lower. But what happens to the negative volume? It's way higher. What happens to the positive volume? It's lower. What happens to the negative volume? It's higher. So you have a situation where basically it's diminished volume, diminished volume to the upside, higher volume to the sell side, which results in this big drop, as you can see. So understanding this chart pattern is highly critical to your success over the next few days here, meaning tomorrow, May 27th, Friday, May 28th. Monday, the markets are going to be closed, but next week, okay, contrary to the opposite belief, I mean, we can have some serious moves lower in the market, despite of what the VIX is doing right now. The VIX has been crashing, guys. In one of the prior videos in the last 14 days, I pointed out that the VIX is not done moving higher. And so severe pullbacks in VIX like this are to be bought, because VIX is going to 40, guys. Whether you like it or not, whether you like my bearish stance here, I'm trying to illustrate the truth, which is derived from the chart, multiple charts, not just the chart of Bitcoin. But since Bitcoin recently has been the main moneymaker, if you're a short seller, okay, and if you missed the opportunity to short Bitcoin, we've posted multiple videos. I just don't want you to miss out on the next big move. And it's not going to be to the upside. I mean, clearly Bitcoin can bounce at any given moment, but you want to focus on shorting those bounces as the history portrays. So basically, right now we're in circumstances where it looks like we've bounced on Bitcoin, right? Let me see if I can bring up the current chart. Bitcoin, BTC, USD. What? Not when you're looking at this chart. You're like, damn, we're bouncing. Oh, I thought Bitcoin was going higher. Damn. So, well, apparently that's not the case. So maybe we should take a look at a 15-minute time frame, right? Because you got to look at multiple time frames. So this is exactly the pattern that's been developing, and this is exactly the pattern that has the continuation, right? So you've got last bounce, just like I pointed out on the historic chart. You've got the drop, you've got the bounce, you've got the drop, you've got the bounce, you've got the drop, you've got the bounce, you've got the drop, and you've got the bounce. And all of this happens under the conditions of what? Of a death cross being developing, where the blue line is about to intersect the orange line again. That basically happens when some bigger, severe moves to the downside actually take place. So even though Bitcoin did bounce out of 31 area back to the 40K, as pointed out by the prior video on Bitcoin, the next move in Bitcoin was going to be lower. And that's exactly what's taking place. Now, so don't be surprised if you wake up tomorrow and Bitcoin is at 33, 32. I mean, don't be surprised that Bitcoin over the weekend is going to move under 30. The question you should be asking yourself, if you missed the last time on the last opportunity where some of our traders made an excess of 10,000% on short in Bitcoin, I mean, what are you currently doing? Do you have a strategy in place? Or are you just listening to the rest of the world that's been bullish on Bitcoin forever and ever, and they told you to just hodl all the fucking time? So if you've been hodling, you're losing your ass right now. So maybe this message is going to reach you this time to where you can start actually paying some fucking attention here. So with that said, the next move in Bitcoin is lower, not higher. And the question you should be asking yourself, do I know exactly how to put on this trade? Because if you don't, okay, again, your exits and entries is the stuff that actually makes you the money. So do you know how to put on this Bitcoin trade now that I've shown you the charts, and now that I've shown you some historic charts which point to a clear bounce, drop, bounce, drop, bounce, drop type scenario? So if you don't, make sure you click the link below and get in touch with a senior trader here at 13 Market Moves. But for now, let's take a look at a bunch more charts to bring some more clarity if you're really trying to understand this and study the market, and if you're really serious about making money with short-term movements in whether it's Bitcoin or a particular commodity or stock. So let's glance at a few more charts around here. Okay, so we've talked about Bitcoin, guys, and now let's fast forward to Dow Jones Industrial Average in October of, let me switch the color here again. So what we're working with is October 18th, 2018, Dow Jones Industrial Average. And so the importance of this chart right here, guys, is notice that we've had a double top formation right here. And you may be thinking, okay, but what does this have to do with anything right now? Again, let's pretend that I will entirely erase this part of the chart. Let's keep doing this exercise. I want you to fully understand that this is what happens when you have a setup like this here. So you've got a top. You have a situation on top that while it's moving higher, it sets a new high in RSI. And then as it sets even a higher price action, it drops. Now, it could be a slight variation, but basically it's a double top. Double top does not necessarily have to hit the entire price level down to a T, down to a penny, or down to $1. It's a formation of a double top where something is topping, and after that it's crashing, which is exactly what we had recently. We're going to take a look at the recent chart. Notice that this beautiful drops, they precede some bigger drops. So if you're a student in the market back in October 2018, you know that this sort of bounce was just a predecessor to a much bigger drop in the Dow, practically all the way down to 22, 23K. So, but the main idea here is to focus on what was the predecessor to that substantial move lower. So in October, it was already clear based off this pattern right here that the market was going to move lower. And again, focus on a double top formation, focus on these candles right here. And so if you were not aware of what was going to be happening next, right? It looks pretty fucking bullish, don't it? Damn, Leo, that is bullish. How the hell did we really drop for real from there? Yes, we did, and we kept dropping, not without bounces. So let's take a look, guys. It's not a coincidence, all right? So let's take a look at another pattern that's very similar to that, but from a different time frame. At this point, we're looking at February 2020. Again, we have the same thing. What do you guys see? We got a double top. Now, we're no longer in October of 2018, but the pattern is the same. It's the double top with the divergence in the RSI. When the price actually moves higher, RSI actually drops. Okay, this is what you need to focus on. Now, this is what followed, okay? At the point where we've predicted the COVID-19 crash, we didn't know it was the COVID-19 that was going to crash the markets, but we were just following the pattern, and that's how we're able to know this. So understand this, if I was to simply erase this part right here, and if I was just to leave this right here, okay, how do you guys feel about this chart now? Damn, Leo, that's pretty damn bullish. Okay, so now you already know what happens next. The market crashes the fuck out. But to the most market participants, what do they see? Well, they don't look at this as a double top because they don't study the divergences we list in our charts divergences course. what they simply see is this. Oh, the trend is intact. As a matter of fact, if you turn to any news media channel, they're going to show you a chart like this, and what are they going to say? Wow, the trend is your friend. Okay, this friend is about to cost you thousands, if not hundreds of thousands of dollars, okay, if depending on the size of your account. So the reason why they say that this is the trend and this is your friend and all the bullshit is because they don't understand that there's a major trend reversal that has already been set in motion. And all they're referencing is the fact, okay, well, the trend is untouched because we simply just drop slightly below the blue line, but then we bounce, and they say, okay, hey, everything is good. So let's compare this quickly to the current conditions. Okay, let me bring up the chart of Dow Jones. And actually, let me bring it up on the daily to make sure we're matching. We're looking at the same time frame that I was just showing you examples from. Okay, so what do you guys see here? Okay, well, it's a very similar pattern. Okay, and what we may have is just one final move. So here's the top one. Okay, if we're really focusing, here's top one. Here's top two. Now you can also count this as stop. Again, these stops, they don't have to match. I mean, we're within a few hundred points away from, you know, all-time highs. So when you draw the stop, it's basically okay. So top one, top two, top three. I'm going to show you another historic analog which almost identically resembles that. And yeah, I'm just spoiler alert. What happens next is this. All right, and I've got a really good evidence piece, which is just, oh my God, there's nothing to be said. I can just show you the damn chart. If you know anything about charts, you're going to be like, ugh, damn. Okay, and this is what's about to happen. We're about to get a major, major move lower. Nobody's talking about it. Everybody's highly bullish. Everything is beautiful. Okay, everybody's ignoring the charts that the history has provided us times and times over and over again, pointing that when you see shit like this, it's not the time to buy the dip. It's time to run, and it's time to run fast, and not just run from your bullish positions, but run and open the short positions lightning fast. As a matter of fact, when you see a major drop like this, followed by a bounce, followed by another bounce, what's really happening in these market conditions, guys, and let me see if I can draw this square. What's really happening here is institutional investors, whether they're going to admit it, we're going to find later out when we're going to see, oh, but this big institutional investor was unloading their shares for 2 months. And so it's not showing up in their report the same day they unload the position. It shows up later. We get to find out about it like a couple of months later. But the bottom line is, when you see a market structure like this, oftentimes it is the only thing that holds it up is the very fact that institutional investors are actually accumulating short positions. If you watch the movie The Big Short, okay, he's right about the fact that the housing market is about to crash. Now, he's right about it long before everybody else is, so he has to pay the high price of his position going severely against him for about 12 months until he cashes out on billions of dollars. So the fact is, they don't let the market drop until all these big-ass institutional investors, they have accumulated some substantial short positions. So if you haven't watched that movie Big Short, watch it again, because I'm surprised how many people actually miss that this is the biggest point of the movie from the standpoint, if you are a trader, okay, it takes some time for these big institutional investors to accumulate their short positions, and by doing so, while they're accumulating their short positions, they're in a way holding up the market before essential much bigger drop takes place. So now, these are, again, the current market conditions, guys. This is May 26th, which is today. I'm recording this on May 26th. And this market structure, take a really good look at it. It shows up in many, many other instances in history, which we are going to review. So let me bring up this situation right here for you. We're going to glance at, actually, let's take a look at NASDAQ, because, you know, we want to switch it up a little bit and show you guys different examples, not just from, some of you may be wondering, well, why are you showing us Dow Jones? You know, it's only 30 stocks. So I'm going to diversify this example a little bit to help you guys visualize. It doesn't matter. The charts, they don't lie. If you focus on the right stuff, you will be ahead of the market while they're going to be talking about this shit tomorrow in the news. So here's what we've got here. We've got a situation of what? Well, this is your top one. Here's your top two. Okay, it's nice and easy. And this is what happens next. Now, clearly, again, let's do this exercise one more time. Just one more time, guys. Okay, if I didn't show you the fact that that is what was going to happen next, right? If you look at this chart, what do you see? Is it a bullish or bearish chart? Oh, damn, Leo, that's pretty fucking bullish, if you ask me. Yeah, while the signs were clearly there already, right? You've got the divergence on the RSI. It's there. You can't mistake it for nothing else. All right? And, guys, this is NASDAQ from May 1st, 2000. I mean, this is not a joke. Let's take a look at the current condition of NASDAQ. Now, that was May 1st, 2000. Damn it, that was 21 years ago. So let's take a look at NASDAQ right now. What do you guys see? Well, Leo, well, I mean, I don't see what you see. Well, let's take a closer look here, shall we? All right, so this was your top one. Right here, this was your top two. Now, what happens, based off the historic example, is we get a move lower. And then what else do we get? Guys, you should know this by now. What do we get? We get a freaking bounce. Okay, so let me rewind this back one more time. Let me see, as a matter of fact, if I can erase this right here for you. Okay, so what we have is a situation where, let me draw this out. We have double top, we bounce, double top, we drop, and what happens? Like, this is exactly the bounce that I'm showing you right now. This is the bounce right here, guys. This is the bounce. Let me draw this just a little bit better here. This is the bounce that I'm showing you on the current chart. And after that bounce, what happens? Well, we drop. So let's go switch to the current chart. Do you see this bounce right here? Okay, this is what's about to happen. We're going to drop. Okay, it's simple, it's beautiful, guys. If you study the history of charts, you are that, guys. As a matter of fact, that's the only way to stay ahead of the market. Because if you stay with the news, guys, when are they going to talk? Or what are they talking about today? Oh, it's bouncing, shit is bouncing. Yeah, okay. Why aren't they telling you that stuff is about to move substantially lower the course of the next couple of weeks? Because they don't know. They don't fucking know. All right, we do this for a living. We study charts every day. 365 days. We don't take days off for Memorial Weekend or Thanksgiving or Christmas, and that's why we nailed the Christmas crash of December 2018. And I think this is probably the next chart that is worthwhile mentioning here. What do we have here? Well, no, this is a sort of a double top formation. So after the drop, here's your top one, here's your top two. Very similar formation in S&P 500 and September 18, 2020. And what follows next, it's a drop. And it's actually a bigger drop, right? You already know that. So this is the sweet Christmas crash of December 2018. So the crash actually begins. Notice when I say the crash begins tomorrow. Like tomorrow is May the 27th. So May the 27th would probably correspond to this candle right here, where, or it could correspond to this next candle right here. So it's going to look like tomorrow, when you look at your charts, it's going to look like one of these candles. And as you can see, when I say the market crash begins, it doesn't mean that this is going to be, this is not your biggest drop, but it's the beginning. Like, this is how you know that shit is about to drop substantially lower. The candles are going to look like this, and yeah, you drop and you still have the ability to bounce. You drop it again, the ability to bounce, followed by a major drop, which happens to be the biggest drop was when? On December 24th. Get the hell out of here. How's that? Is the market even open on December 24th? What are you talking about, Leah? Guys, it's right fucking here. It's December 24th, biggest drop out of this entire chart. So when people tell you, oh, but the market is not going to be volatile around the holiday, but everything is in control, but everything is fine, then what the hell is this? So when you're listening to generalizations on the news, I mean, it doesn't necessarily reflect every possible scenario and every condition in the markets. Based on what 13 market moves formula, the crash begins tomorrow, May the 27th. And those people will tell you it's the Memorial Day and it's sure, but it begins now. When do you want to short something? You want to short it at the top, and right now we are at the damn top. So let's take a closer look at the S&P chart right now. S&P, right here. What do you see? I mean, hopefully by now you can see that this is a double top formation. Top one, top two. Okay, what follows next? Well, as I've just shown you, the next candle is going to look like this or like this. Let me erase that so you can take a better look right here. So the next candle is going to look like this black candle right here, or it's going to look like this. So it's going to be a black or red candle. It's not going to be a white candle like this. So there's a lot of people saying, yeah, but you know, Tom Lee, oh, the market is about to go through the biggest market move higher we've ever seen. I mean, the guy lives on the moon. I mean, when you show him a picture like this with a black candle or red candle all the way at the top, he tells you the market is about to move higher. You know, that's what he was saying. Guys, this is a fact. This is what the guy was saying. Do you know what he was saying? Tom Lee. Go fucking research it on your own. Tom Lee right here says, we're going to have a Christmas rally. All these damn analysts right here, December 2018. Oh, get ready for a Christmas rally. And we studied the markets throughout the history. They never crash on Christmas. That shit never happens. Right? And today they're probably telling you, oh, it's the Memorial Day weekend. Or Labor Day, whatever we got this holiday coming up. That's not important for somebody like me who studies the charts all the damn time, okay? So they're telling you just because it's a holiday, everybody's going to be gone from the office. Everybody's made so much money. They don't need to stay in the office. Nobody's going to be trading. That's what they were telling you right here in December of 2018. I rest my case. That's it. It's that simple, okay? So, but is there any bad comments that CNBC gets? Like, we've told you to short Tesla since it was $900. We've given you 20 fucking perfect trades. And yet, we got some goofballs now leaving some comments on the last video saying, but damn it, Leo, you said it was going to crash to, you know, 505 or 450. I said, yeah, damn it, it's going to crash to 187 by the end of the year, 6 months from now. And after nailing 20 trades on Tesla, I think, hey, there's some leniency in me missing one trade. And by the way, what should you do? Okay, the pattern on Tesla is identical. It's short the damn bounce, okay? If we're to compare this chart to the chart of Tesla, right? I mean, Tesla, where's Tesla on this chart? Tesla is right here on this chart, meaning Tesla has made this formation already, okay? It already dropped, it bounced, it dropped, it bounced, it dropped, and now it's going for a bounce. This is your perfect entry as a short seller. You live for Tesla bounces, damn it. Let me show you how Tesla chart looks right here. Let's bring up the chart of Tesla real quick. Oh my God, you hear all over the news today. Oh my God, they're buying so many Tesla calls. Okay. Let's see what happens tomorrow. So, do you see the pattern? Do you see this simple pattern? What do we say? Said short the bounce, it drops. Short the bounce, it drops. Short the bounce, what happens? It drops. Short the bounce, what happens? It drops. Short the bounce, it drops. And now you want to be screaming like, Leo, you said it was going lower. Damn it, I've predicted every one of these pops and drops. Okay, and there were some smaller ones. If you were part of the group, you know we've been consistently locking in gains on Tesla. Okay, maybe without this last time right here, because the charts were pointed that this move lower. We didn't have really like a flush, like a seriously where people just entirely capitulating. Okay, what do we have? Well, right here, we have a situation where Cathie Wood buys 39 million shares. In 2 days, we had volume of like, 20, 30 million shares, which means Cathie Wood bought most of the shares right here. Now, you know when else she did this? She did this right here. 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 So she's been buying the hell out of this stock forever and ever. And the fact that she's buying the dip right here makes no fucking difference. She's been wrong 5 times in a row over the last 3 months. Why is nobody talking about that? Oh, but Leonardo, you got this trade right here wrong. I put my whole fucking account in it. I didn't tell you to put your whole fucking account in it. Okay? I told you in 6 months this shit could be at 187. I told you it was a high probability of a drop, which it did drop. But damn it only dropped to 548, Leo. I thought it was going to go to 505 like you said. Damn it! Have your fucking brains learn the chart courses and understand when these reversals take place, which we did bet heavy on every Tesla bounce. And guys, ultimately, okay, you're going to see that the move is about to unfold, just like it unfolded on every instance right here on the chart. You want to short this bounce right here in Tesla. You want to short it. Come on, man. Where are we? Okay, right here, I got it. You want to short this bounce in Tesla. While the whole world is screaming, buy Tesla calls, buy Tesla calls. So the worst outcome on Tesla, okay, it can hit this level of 650, 660, and then it's going to fall the fuck out. Okay, so be ready. What you can do is you can start shorting it now. You can add more, but you never want to go all in on, one kind of sort of position, okay, with very rare exceptions. So bottom line, guys, what is this? It's a fucking downtrend. Okay, I rest my case. Let's move on to the next example here. But I hope you get an idea that short the bounce. Bounce, short. Bounce, short. Bounce, short. Okay, next example from the historic analog. Oh no, it's Tesla again. Okay, so what do we have? Okay, we have a scenario here on Tesla when dating to, we have a scenario on Tesla dating all the way to April 25th. I guess the seasonality part is here, but it hasn't been highly repetitive. So Tesla pop, bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce, drop. And guess what happens next? It drops even more, all the way down to, I think, 187.50. 187.50. We actually posted a video on the channel at the time Tesla was trading around these levels. Now, that was before Tesla did the stock split. That was like way before. I mean, guys, it's April 2019. So, guys, short the damn bounces. Okay, they work. Another historic example, Bitcoin, guys. Bitcoin, in this case, we are on Bitcoin April 24th, 2019. And interestingly, back then, Tesla didn't own any Bitcoin, but the pattern is similar, right? You want to short every bounce. If you would have shorted every bounce in Tesla, you would have made a killing. If you would have shorted every bounce in Bitcoin, you would have made a killing. So even back then, they were somewhat correlated. So what do we have? Well, we have a bounce in Bitcoin. What do we have? We have a drop. We have a bounce. We short the bounce, we collect on the drop. We short the bounce, we collect on the drop. We short the bounce, we collect on the drop. Oh, damn, we collect on this drop. Guys, this is a beautiful chart, but it tells you exactly what Bitcoin is going to be going through, right? I mean, there's no guesswork here. It's bounce, drop, bounce, drop, bounce, drop, bounce, drop. It works like clockwork. Why wouldn't you take advantage of it is the question. Okay, and so this is Tesla on daily chart, basically illustrating the same thing, that it's bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce, drop. Okay, So it's a beautiful pattern to short the bounces when market conditions are such where they are creating these double tops. So historically, it could be a variation of a double top like this. Historically, it could be a variation of a double top like this. Remember, this is May 2000, the tech crash. Variation of a double top like this, which, if you already forgot what happens next, woo, fuck, yeah, no way, it looks so bullish. Damn, it looked bullish. Okay, variation of a double top like this. Woo, shit, not so bullish anymore. Okay, and so historic examples of Bitcoin and so on, guys. I mean, this is a really good snapshot, right? So it pops to the top, it drops. The way most of the market participants are feeling right now, they feel like this bounce, temporary bounce in Bitcoin, is going to save the world, and it's just going to continue to go higher and higher and higher forever. So this is how people lost fortunes on Bitcoin, right? So they bought it right here at the top, just like people were buying it recently at 50, 60,000. It drops to 30. People like, oh my God, what do I do? Well, I promise you, they weren't adding on the drop. Now that it's bouncing, what are they doing? They're like, okay, it's a good price. I got to buy it right here. I got to buy it. It looks good. It's going back to the moon. So they buy it, and what happens next? The shit collapses, okay? Now, understand, this is like a 60-day time frame on the chart. So, I mean, this overall move takes longer than a 48-hour or 72-hour time frame, but understand the pattern, because within this bigger time frame pattern, there are bounces and drops, bounces and drops, bounces and drops. So if you focus on the bounces, guys, opposed to focusing, oh, it's going back to the moon, okay? It's people that think right now that it's going back to the moon. I'm not saying that Bitcoin will not ultimately go to the moon. Do not get me wrong. I'm just saying, if you love Bitcoin, okay, do it for the love of Bitcoin. Short the fuck out of it, okay? Now, I will conclude with this. There's some insane trading opportunities, guys, tomorrow. Some insane trading opportunities Friday. There's some insane trading opportunities next week, and they're going to be intense, mainly for the fact that I will spell this out. I will actually spell this out. It's all about cost of option versus, okay, how much you sell them for. That's it. Right? It's your cost of the entry, cost of price, how much are you buying it for. And so when we have conditions like this on the VIX, it often gets mistaken, but those people that don't understand how to trade trend reversals, okay? So they will look at the VIX and they will say, oh my God, the VIX, it's bearish as hell. And what that means is the price of options, I mean, clearly the price of put options, when VIX continuously goes lower and lower, they decrease. Okay, the lower you buy stuff for, the higher your probability of actually locking in a 5 or 10x type trade, or 20x type trade, or 30x type trade, as we've shown you here on our channel many times. These conditions are actually favorable if you foresee a trend reversal in the VIX. So this is the point where your put options are highly inexpensive. If you've got reasons to believe that there is a trend reversal opportunity, which we do believe is in the midst of happening now based on our 13 market moves, we will have a substantial drop in the markets in the next 14 to 20 days. So you get to buy your put options cheap right here. You get to sell them for a substantially higher premium. As outlined in some of the recent videos, we have a great probability of actually VIX going all the way here, actually slightly higher than here. You could see VIX go all the way to 40, guys, 40 points. So recently we've climbed as high as 28, 29. We think we actually had a shot to get to 40 from here. But I did mention in that video that not without a pullback. We're destined to get a pullback. Clearly, I did not expect the pullback to be of this big of a magnitude. But now that we are at these levels, I mean, this is very strong support for VIX. I think it's a very safe place to come in and accumulate a bigger position, because ultimately the VIX is not just going to stop here, right? I mean, the VIX is going to go right here, guys, okay? And that would be the point to actually do what? Right here. That would be the point, and when VIX is at 38.40, that would be the point to actually go long, not short. But this is where most of the people are going to go short. This is where most of the people are going to get out of their bullish positions, because it's going to look, guys, it's going to look like this. I mean, it's going to look like this right here. So people are going to be bailing out when most of the people are going to bail out right here. And this is the type of situation that's going to coincide with VIX at 40, right here. This is where most of the bulls, they're going to fucking give up. Again, this is where you want to come in and you want to officially buy the dip. You don't want to buy this dip. You don't want to buy this dip. And you don't want to buy this dip. I mean, you can buy every dip you want, but, you know, I mean, please. That would be a great fucking video for everybody to watch. It would be highly entertaining. So, buy the dip if you want. Here at 13 Market Moves, guys, we are continuing to short the bounces despite of the fact that this is highly unpopular trade at the moment. Shorting the bounce was highly unpopular trade right here. But it was the most profitable trade. Oftentimes, your most profitable trades are going to be highly unpopular trades. So, with that said, if you'd like to get your own strategies, if you'd like to stop listening to the news and create your own trading ideas, click the link below. Guys, for the very first time, we are taking Bitcoin. Damn it, Leo, you're taking Bitcoin for your courses now? Damn right, guys. We're taking Bitcoin. We are taking Bitcoin. We need more Bitcoin to short the hell out of more Bitcoin. So we're taking Bitcoin right now, guys. So let's roll. Let's make this happen. Pay for your courses with Bitcoin because, yeah, seriously, you got two options. Bitcoin is going to drop, so you can sit on it, all right? Or you can give it to us while it's still highly valued, like at this level. And you can take the course, make a bunch of money, and then you can buy it back at a much better level. So, but in the meantime, practically get a free ride on our courses, get a lot of valuable information that's going to help you take your skills to the next level. And ultimately, you will know when is actually going to be the perfect time to buy the dip. By doing so, you get free education, you get skills that you can use for a lifetime, okay? And you will actually get to buy the real dip, okay? And in the meantime, you're going to know everything, how to short the bounces highly consistently and highly profitable. With that said, guys, if you are the one that's ready to go to the next level, click the link below, schedule a 20-minute coaching call, or visit 13marketmoves.com. Also, you can visit 13MTV and make that purchase with Bitcoin. We're temporarily giving 10% off if you pay with Bitcoin. Guys, let's roll. I'll catch you in the next video soon. Make it happen.